computer, and I'm also will record it via Zoom. So I've got twice the likelihood of it working, which doesn't necessarily mean it'll work. Record to the cloud. All right, perfect. So it looks like we're in good shape. All right, well, welcome everybody. This is Jeff Scott. This is certainly unusual for me to be doing this at 8 o'clock live. For those who haven't been around for a long time, I do live ones. I like doing live ones on 3-day weekends because, frankly, I can't update my data on the East Coast until 7 o'clock. And that means I don't have a chance to look at anything. And then I go live at 8 o'clock. And, I don't feel like I've got my shit together, excuse my French. So it's easier when it's a 3-day weekend because there's not been any new data. There was a comment on the Discord board about HGSI looking like it was doing some updates. And frankly, it probably was. And that I believe that HGSI every day, even if there's no market hours, will update corrections as well as fundamentals, earnings, etc. So let's go ahead and the introductory comments, and this will be a lot of stuff today. I enjoy doing these. Like I said, I don't do them all the time, but when I do them, I enjoy doing them. So now let me see if I can. Yeah, I'm not going to play games with the display setting. It means that you're seeing both of the slides here. But in the past, when I've changed it, it's messed up my resolution on my recording. So I'm not going to risk that. I entitled today, Pause Before the Storm or a Summer Rally. Hopefully by the time we get done, you'll see what I think is going on, why I think what's going on. I'll show you a couple of my tricks that I use that help keep me in the market. The folks that came to my December meeting probably thought I was nuts when I told them that my favorite trading technique is sitting on my hands. And there's truth to the fact that staying in a bull market a long time rather than in and out, in and out, in and out is where the big money is made. And it's been a great couple of years, I'll tell you that. And I'll show you some proof because I think when somebody's telling you how they trade and what you need to be doing, it'd be nice if you knew if they actually made money. And I remember listening to one of the talking heads who apologized one day that his indicator really didn't work and that he apologized for blowing up people's accounts. And then he tried selling mentoring 5 minutes later. And I just thought that there was a problem with that. So anyways, here is the disclaimer, which everybody should have somewhere every time a talk is given. This is for educational purposes only. It's in the spirit of education and not investment advice. If I pick stocks, it's educational. I'm not doing anything that says they're going up or going down in your account. I'm a doctor, not a broker. Most physicians have lost a lot of money with their investments. And frankly, back when I practiced, and like a lot of people, I had a tendency to buy what they were talking about in the physician lounge. I lost money because usually they were selling, or somebody who was teaching them was probably selling to us when we were buying it. I'm independent. I use a lot of different tools. I mention many of those tools during my webinars. No one pays me to mention it. And if I mention it, it's because I use it. And it doesn't mean you have to use it, but I think it's important that you see what I do. I'm not a software developer. I have no style that I've patented. So I use whoever stuff I think helps me work. And I paid for everything I use. And obviously the last bullet point, trading involves risk. You and your loan are solely responsible for any investment decisions you make. I do trade a lot of options, and the Options Industry Council would probably like a bullet point that says that how risky options are, need to be careful trading options, you need to know what you're doing, and I refer you to the excellent Options Industry Council website for more information. That said, here's my feeling about options. Options reduce my risk and magnify my gain. I like that. But it's how you use the options and how they work for you may be different than how they work for me. Now, somebody is on the participant side should have a smile because I've changed my board, and I'll only put things on this board that I use on a regular basis and things that help me make money. Obviously, HGSI is the core of what I use. And that hasn't changed, and I don't think that will change for as long as that product is on the market, and hopefully that will be a long time. For those that haven't been around a lot, HGSI came after this great guy here, may he rest in peace, 2-year anniversary this weekend of Ian Woodward's passing. Ian was a student of O'Neill and Cancelim. He listened to O'Neill on the radio, and he built his own style of trading. Ian was a speaker for a now defunct company called Telescan that I used in the late 90s with my trading, and I met Ian at a number of Telescan meetings, and then he spoke in Atlanta where I was in practice in probably the early 90s is when I first saw him in Atlanta. When Telescan went out of a business, so to speak, Ian partnered with a guy named George Roberts, who had a program that had industry groups for rotation, which he licensed from O'Neill, and Gary Liebat, I don't remember Gary's last name, it's been a long time, who was the data person. Those three came together, and that's where HGSI came from. George Roberts is a proprietor of HGSI. Ian was the educational division. He taught us how to trade and how to make money trading. And Gary provided the data. The data company, bad business to be in, is no longer with us. George upgraded HGSI to have the data in it itself. And as most of y'all know, as I said earlier, we lost Ian a couple years ago. Ron Brown, next to them, was like me, was a attendee in the room. Also a very successful trader, great person. And Ron really was lucky because Ron became Ian's partner. And I can't think of anybody else I'd rather have spent time with, learning from it and hanging out with than Ian. And Ron is still very active as a teacher and trader on the board. And where I'm sort of more, I think, traditional of what Ian taught us, and Ron has gone in volume price analysis, it shows you that HGSI is a tool, not just a philosophy, and a tool that can do lots of different types of trading. So we started with Cancelim, Morales, and Catcher. I know Gil uses HGSI for some of his charting. Pocket pivots, Bible gap ups. John Person. Now, it turns out that just knowing what stocks to buy and when to buy them doesn't make you rich. You got to know how to trade them. Is it stocks? Is it options? What's the spread? What's your stop loss? What's your profit target? How do you manage the trade once you're in it? And that's what I've learned from John. And he's got some great indicators. He's a great teacher and some great books that I've shown here that have helped me go from just figuring out what stock to buy, but how to manage them and make money. Down here in the lower left-hand corner is my friend George Lee. I've had some great opportunities to spend time with George at the podium teaching folks. We do a couple of different programs a year, typically Greg Mills's program out on the West Coast. And then up here, Van Tharp, really, in my mind, the god of a position size and money management, very consistent with what I learned from John. Tough books to read, but very important. And then what I've added, and he's probably surprised maybe that I put this here because I don't add things here. This is, people have probably seen SN on the Discord board, and I'm going to talk about the Discord board in a second. Sagar Nandi is in Singapore. He's a trader, didn't come from Wall Street necessarily, more engineering and other things. And he's got some innovative indicators. You've probably seen me talking about my automated trend lines, where there's a lot more to what he does. And I invited him to participate in the Discord board. I think he's got some great ideas and some great indicators. And what I like about him is he's also a top-down guy, and it's just another resource. And you can never have too many resources in my mind because, over time things change. And so I just put him there because it's something that I use on a regular basis. My style of investing, for those who haven't heard me speak before, I'm obnoxious, and I'm happy to be. And it's just the way it is, live or in my webinars. I trade top down. Markets matter. Then I want the right industry group, and then I want to find fundamentally strong stocks with good setups. That's top down approach. That's how I make money. Now I can't help myself with the bottoms up approach, and on the weekend I'll look at 500 to 1,000 charts to see if I missed anything on the top-down approach. Now, the correlation of what I find on my bottoms up and my top down is probably over 80%. So I only do the bottoms up on the weekend, and I add to the top down approach on a nightly basis. When I trade predominantly equities. 70-30% of the time I'll use options as a stock replacement instead of buying stock. And I may talk about that some tonight. Certainly I talk a lot about that when I do my live meetings. I live for pullbacks in an uptrend who sit on support and have a momentum breakout off of support. So if I had a way of finding stocks that are in an uptrend that have pulled back to a major moving average or a trend line support and then moved off of that area, then that would help me find more stocks to trade. I'm not going to spend much tonight on how I use stops, but as you could see here, I use multiple different stops. When I take the trade, it's based upon a chart pattern. I define my stop based upon that pattern. At some point, usually when I get to my first target, I'll raise the stop to break even and take off half. When I'm up 8-10%, maybe more, depending upon the position, I'll move to a trailing stop, and I like the chandelier stop. And on my big winners, I can almost talk. On my big winners, I'll take off my automated stop and do it manually using a chandelier. Why? Because I'd rather give up some profits on a big winner than have it knife through the stop and the next day move back above my stop. So what I'll do on my long-term stocks is if I trade below the chandelier, then I'll put a sell stop pretty much at the low of that day. And then if it opens up the next day, my sell stop doesn't get filled. And then I look at how far my initial stop is away from my buy price, and I figure out how many shares I'm going to buy by how much I'm willing to lose on a trade divided by the risk per trade. If I'm willing to lose $5,000 on a trade and that initial stop is $1 away, then I can buy 5,000 shares. If you like this stuff and you want to learn in great detail, as I said, I'm not here to sell you anything, but I probably will do another live session, 1 or 3 days to be determined in South Florida in the fall. I enjoy doing them. I spend every penny on the meeting. I don't want to make money doing them. We go out on my boat. We could even go golfing. Who knows what we can do. But I do them because I like to teach, and I like to be on stage, and I like to help people, which sounds obnoxious because no one really believes that, but it's true, and those that know me know that that's kind of what drives me, and a lot of it is given back to Ian, who did a lot to help me. I use a lot of programs. This is what I need, TradeStation and or Thinkorswim. I like Genesis when I do trade futures, which we're not talking about today. HGSI is my analytic product that I like to use. EdgeRater supplements HGSI. I've now started using Sager's product a lot, and it's both the indicators in TradeStation as well as his market rotation and stock fundamental, the vital and the elites, which the edge and the vital rather, that help me. Seasonality is something I follow. I may look at it today. Nothing made me happier when people actually listened and took the trade I spelled out on the Sunday before Netflix earnings on Tuesday, the market being closed on Monday. People who took my spread made money. In fact, I got text the next day from people saying they made 4,000% in one day and thanked me for it. Some of this is easier than other stuff. That's an easy trade. And then there's another websites that I use. Speaking of websites, and again, I want to get through the presentation quickly. I like spending time in the charts, but I just wanted to call out, here's HGSI's website. And the most important thing about here, there's a free 30-day trial, and under investing strategies, you'll see hundreds of movies by Ron Brown and I think they help learning how to use the program and hopefully help people make money. Stock patterns are cyclical, and this is an old chart that I always like to use it because the stocks that I buy, high growth stocks, they go up like rockets, as Ian says, but they fall like rocks. And you got to know where you are and what stage your stock is in, the market's in, because it really impacts on your bank account or your investment account. Now, it turns out this is a very fractal pattern, and you'll see the same pattern over and over again in almost any time frame in any instrument. Yeah, you want to leverage the farm when it's a green circle. You want to be careful when it's a sell signal. The hard part is stage 3, which is the chop and uncertainty. And frankly, I think we've been living in that for quite some time. And I think we're there today with some uncertainty. When you see a white slide with these 3 little colors here, that's an Ian slide. Now, when I grew up, we had chutes and ladders. Apparently in England, they had snakes and ladders. And if you think about the game chutes and ladders, you get the ladder, you get up here, you're playing against in Ian's case, he was playing against his little sister. I used to play against my little sisters. And the goal was to get to the 100 and win. The ladder helped you out because it took you up, but if you hit, in our case, it was a chute, but in Ian's world, a snake, it took you back down. And that was a fun game when you're like 6. It's not a fun game when it's your own money. And, I have to admit, I didn't become smart overnight. I didn't make money overnight. I lost a lot of money at some point in my life. I blew up a couple of accounts. And I remember not heeding this slide. I heed it today. And hopefully we'll never be in a situation where I'm getting margin calls because my account has lost value. I get margin calls. Sometimes I make mistakes. Sometimes I forget that I have 400 calls of VXX that are in the money or whatever it is, which if you do the math, that's a ton of money. And I don't have that much money in my account, but they're profitable. But if I forget to take my profits, the next day they get exercised and the bank calls me for a lot of money. Of course, I just then sell off the VXX or whatever it was. But sometimes because I take big positions that I don't ever intend of exercising and then I forget, I get a funny call. But, I laugh. I mentioned earlier that I do tops down. Again, this is an old chart, but someday I'll update it with my own results. But I don't see any reason to do the work because we all know it's true. Ian used to say that this is the most important chart in his entire presentation. I agree. The point of this chart is simple. If you take smart people at picking stocks, and in this case, it was Ian's monthly meeting in Palos Verdes, and you have the same 20 people, 30 people using the same techniques month in and month out to pick stocks, and they were pretty smart, you could actually look at the return at 20 days and 40 days and see that the same good stock pickers are amazing in a strong market, and they suck in a weak market. Well, what does that tell you? I know what it tells me. It's really hard to make money buying stocks in a weak market. That's the first thing I take from this slide. That's why tops down wins. Now, I mentioned earlier that I think the big money is from holding things, and I do really believe that. I bought Amazon at $4.50. I'm still holding it today, a lot of it. I write calls against it. Sometimes I sell puts. Sometimes I buy protection. But, I don't pay taxes on my Amazon until I sell it. And it keeps going up and up and up. But most of the time, if you look at this chart, it says that in 20 trading days or 1 month, you maxed out your gain in a strong market. And the longer you held your stocks, you gave up your gain. So maybe in swing trading, there is a story about getting out quickly. The other message here is in a bad market, in a weak market, not a mixed week, but in a weak market, you don't want to hold on to your losers thinking that they're going to come back. So if we go into a bear, there's no reason to hold losers thinking that they're going to recover. So my approach to the market changes then with how this cycle goes. And as you could see here, I get very aggressive when I'm down here. I mostly sell premium and take smaller positions when we're uncertain. And I go very aggressive to the short side if I think we're rolling over. The challenge that I've had with the market for most of this year is we sort of just take off the top here, and we've been living in this uncertainty where we get spurts up and pullbacks without the major breakout, although maybe that's at hand today. And so it's been a tough market to sell because on the weekends that I go through and I can't find any stocks to buy because the market looks like crap, usually is when we take our next leg up. And when I go through and have exuberance of how many great charts I see, usually the market's going down. So it's been a tough period of time, but I still made some money. Now there's no hope and prayer that you can see this. So let me jump out of this and let's look at some of these charts in the primary programs. So one of the things that I do in TradeStation, and this is something that you don't need John Person's indicators to do this, but it came with his indicator set. And that if you take each of the spider ETFs or your own favorite ETFs and you put the list of stocks from those ETFs, then you could sit here during the day and on a monitor that is a lot higher resolution and not scale back because I'm doing a webinar, I would have the whole market would show up on this thing. Let me see if I could squeeze another line here. And so I'll be sitting here, and I saw on Friday that interesting home builders had some green in it. So this is a group of stocks, especially when I looked at Pulte, Toll Brothers over the weekend, that look like they might be bottoming. They've got some earnings, and maybe there's a reason for it. Materials were mixed but kind of weak. And then all of a sudden, energy, oil gas production, oil services, horrible. Financials, horrible. So those are the weak areas in the market. Credit cards. The industrials were weak. But then all of a sudden, technology looks a little stronger. Semiconductors looks better. Staples, which have been weak, turned around. And I'm just going where my crosshairs are. Discretionary, turned around. Retail, turned around. Utilities, turned around. Healthcare, mixed. Biotech, I think it's weak. The airlines turned around. Well, oil dropped. Interest rates came down, so banks dropped, and so on and so forth. So I'm watching this on a single screen during the market to give me a sense of not only how is the market doing, but where is the money running. And so to create this in TradeStation, all you have to do is get your lists, do a right click on a window and data, add label row, type in what your label is, and then paste. So I don't have a problem sharing this because I've really changed it from what it was when I first got it from John. But it's easy, and you may have different stocks that you might want to watch. So it was a mixed day at best. I made a few pennies on Friday, but it was not a strong day in the market, that's for sure. Now, in Thinkorswim, that's not the one I wanted. Let's see this one. Here we go. I have daily charts that I like to look at. And so if I just open up in my Thinkorswim charts, and I'll comment a little bit about my charts in a second, it's kind of hard to see this with the resolution I use for the webinar, so I'm going to maximize the sell. So what I've done here is I've got candlesticks, volume, and then down here is on balance volume. Up here are some of the things that I like, the force, pocket pivots, kahunas, mobo squeeze, bongos, coded by one of the friends and family of HGSI, Bob Meager. And I'll show you on stocks how I have a whole bunch of things up here, and I don't necessarily put them down in the body. The blue arrows are person buy signals. They come on Thinkorswim at no cost. The yellow is a sell signal. And all I really do is I stuck on it a 17-day moving average in green, a 50 in yellow, and a 200 in red. And then like every other chartist in the world, I drew on it sort of the pattern that we were in for a couple of weeks. And then we broke out to the upside. And interestingly, we've gone sideways. Now, if I shift this to a weekly chart, we've been weekly here for, this is the third week. So 2 weeks, and then we're starting, actually that's the third week. So we haven't, the 528, this is the third week that we're just starting. So we're going sideways, which frankly might be healthy. So as I go through the major markets very quickly, it's a very similar story. So this is the S&P futures. This is the NASDAQ futures. Notice the 17s have crossed above the 50. We broke out to the upside on our little triangle pattern here. On the YMs, breakout sideways, still holding above the 17-day. The IWM has really been leading this market, but it too is sideways, maybe a flag. I mean, I can see flags at anything, so I'm careful about saying that. The VIX, which, this is when the market was tough to trade in February. The VIX is doing quite well. It's if you're long, because it's back down below its 200-day moving average. It did trade up on Friday, so I will be watching it. And if I just look at the weekly on the VIX just to see where it's come from, you could see that it's come down a lot. Now, it's not quite as low as it was back here, but the VIX, if anything, is still down and weak. Let's change this back to a daily. Sometimes I forget to look at my daily and weekly. And then the dollar, to me, it's a tale of two stories. It's been on a big run from 89.40 up to 94.34, and that's been going on. The buy signal from John came in April 19th. Pretty substantial move. Now, that has impact on commodities, which have been strong. It'll impact on the bonds. It will ultimately, I think, impact on some of the interest rates as well. But I said it's a tale of two stories because let's look at the weekly. The weekly is it still hasn't broken above that 200-day. So I'm watching that. I think that's going to be important. And if you like gold, silver, and other commodities, a strong dollar is not going to necessarily help you. So I look at that every day. As I started with, this sits in a Thinkorswim window that I can watch. The other window is really difficult to see with this resolution. It's right here. And what I have are the futures. I'll just blow one up so I can show you what I'm talking about. And I've got a 5-minute chart here, the same basic pattern, but I want to pile a bunch of things on this chart so it doesn't work on this resolution. But I'm looking at the E-minis, the NASDAQ futures, the Russell futures, the YMs, the dollar, which is up 14 cents, so it's come down a little bit. Oil, which is down 80 cents right now. Gold, which is down a bit. Now, one thing just to alert you, the NASDAQ is up 27.50 right now. But if I look at TradeStation and I go, whoops, hit it too many times. And I go into one more over. It tells me the NASDAQ is down 475. There's a reason for that is futures traded on Monday, at least electronically, the E-minis. So this may be on this session that started this evening, but what I think you're seeing here in Thinkorswim is both sessions combined. So right now the futures are positive for tomorrow, even though it might appear negative. And I think if you look at at CNBC, you'll see the 21, 33, 25, so you can see that they're up as well. So the other thing I like to look at for the market is I do like TradeStation for a number of reasons. And it's this view right here. And I call this my 6-point market view. And the reason why I like it is because I get really good help in understanding where I am on that curve of stage 1, 2, 3, and 4. I look at John Person buy and sell signals. On TradeStation, you have to buy them. Green is a buy. That's number one, daily, weekly, and monthly. So the E-minis are in a buy on all three. I look at the envelopes. This is from Alexander Elder. Am I above, below, or within? When I get below the envelopes, it usually means we're going to go back up, and above the envelopes, the opposite. Sometimes it just runs right up the envelope, doesn't get way outside it. That's the second thing I look at. Third thing I'm looking at is the color of the paint bar. Alexander's impulse indicator, green tells you that it's okay to buy or hold. Blue tells you that you can do whatever you want. But when I see a red paint bar, I know it's okay to be short or holding. I don't want to be going long. So I see blue. Fourth thing is I notice these red dots. These are MACD divergence scans. And if you look here, you can see from this high to up here, you got a higher high, yet on the MACD histogram, you don't make a higher high. So it's just telling me that that's occurring with these dots. But as you can see here and here, sometimes it takes months to resolve that. So that doesn't bother me. Then I look down here and I see my weekly bongo is red. The weekly bongo is a buy-sell signal I came up with years ago with, I think it's Dave Steckler, Robert Minkowski, Gallardi, myself, Manu were involved. I can't remember if Bob Meager was involved or not. And this is a buy-sell signal as well. I like the weekly. I spend a lot of time looking at the weekly bongo. And then what's my high jump, how extended I am. So when I look at the E-minis, I see, obviously it's going sideways here. I see a lot to say it's going up. I don't see a whole lot here that worries me. If I look at the NASDAQ futures, and of course, I didn't set this up yet, so now we'll make it happen. If I look at the NASDAQ futures, a very similar pattern, buy in all three time frames. Weekly bongo still red, high jumps a little higher. When this market rolled over in February, my high jump bars were spiking. We knew that this market was oversold because when you start to see a high jump bar do this, this tells you it's the most extended it's been in X bars, and for me, X is 200 bars. And we talked about it because it was at 100 here several days in a row. We'll come back to TradeStation in a little bit. So back here, let me, all right, so we already did this. We already did the major markets. I'll just mention a few comments here about Genesis. I do use it when I trade futures, but why I like it here is I got E-minis, NASDAQ futures, Russell futures, NYSE and Dow futures, daily, weekly, and monthly as far as the rows go. And it just gives me a sense that all the markets are in long-term uptrends. It's been choppy over the weeks, and the daily's starting to look a little bit better. So it just tells me that we had those problems that we did, and maybe the market is recovering. Now I look at a lot of other things to help me understand the market. I look at this intraday and aftermarkets. Now these may be hard to see on the small view here. I wonder if there's a way. That's not going to help too much. But what you can see here in yellow is the S&P, in white is what I'm looking for. This is 10-year bonds and 30-year bonds. And if I was showing this live, you would see they both pull back below important levels. So rates eased below key levels this week. AD lines in white, indexes in yellow, AD lines going up, leading higher, pulling the markets with them. That's bullish. If I look at, and this is in Telechart, white is the AD line of the NYSE. I got spiders, IWMs, I got Qs, and I got diamonds here. So the major indexes all moving up with the AD line. And the one thing that changed this week was we had a pickup on the bonds, probably tied to the rates pulling back and perhaps related to the US dollar. I look at stocks above the 200-day and above the 40-day. When I get to the extremes, I expect to see a market reversal. I don't see extremes here, but we are overbought. I look at 3-month new high, new low. This has been outstanding for helping me understand to be in or out of the market on a short-term basis. Every time we hit this line, the market sells off for at least a couple of days. Every time we hit the line here, it takes a big leg up. So I watch this intraday because it gives me a great sense of when I want to back down. That's when I take those giant, when do I take those giant VIX positions? Or, VXX, which would go up if volatility goes up. When we hit this line, I am buying VIX up the wazoo. And when we're down here, I'm buying long ETFs, TNA, and others because when I hit this line, we always go up. So I'm trying to get an edge so I can make money because that's what it's all about. The daily McClellan, the weekly McClellan, I look at a lot of different things with these. I look for extremes. I look for divergences. And I look for zero line failures. I think we might be seeing, and I picked, John was talking about this on one of his webinars, so I want to give him credit. But we're making higher highs and we're making lower highs on the oscillator. So that might be one of the flies in the ointment that suggests that the market is weaker. Now, imagine if you had a tool, you hit a button, and you could take any index and the components of that index, in this case the S&P 1500, and hit a button and find out where they were within their Bollinger Bands. How many were above their Bollinger Bands, how many were below, and then what percent were actually above the midline. So what I learned here this weekend, and this is just the date I created the file, this is the date we looked at, that 70% of the stocks in the S&P 1500 are above the midline in their Bollinger Bands. That is bullish. I also noticed that very few stocks, 4% here, 2% here, were below or above the bands. No extreme, no helper. How do I use this? This is how I use it. When I looked at the bull market that we've been living in, every time I got patterns with high numbers of stocks where my arrowhead is below their Bollinger Bands, the market rebounds ferociously. When the market gets high numbers of stocks above in a bull market, there weren't any sell-offs. It just was the end of the market rise and they would go sideways. So I look at this for extremes. The Hindis, these are a signal that we expect to see before a major market correction. There has not been a major market correction in 50 years that was not preceded by a Hindenburg omen. About 25% of the Hindis are meaningful. Most are just small little pullbacks. Just look in this line and you could see for months there's been no evidence of a Hindenburg. That's bullish. This column here is the Woody indicator. Gold. Green is the Woody buy signal. Yellow is a neutral. Red is sell. This is a pretty strong picture, which tells me it's okay to be long the market. When I looked at sector strength, I could see where the strength in the sectors are, and we'll come back to that. Now, the other thing that you can do in HGSI, again, these are things I look at every night. It's all automated in the programs. I just chart, is I've created a number of fake indexes. And these are indexes that are meaningful to me. This came from Ian, Canaries in the Coal Mine, taking the FANG extended, price line is now called bookings, it's reflected down here, and then looking at this index as an early warning signal of a market breaking out or falling. Well, you can't see it real well, but this is poised to break out, and I'll try to come back to it. It's sitting right below the PSAR dot, breaking out, and if the FANG stocks break out, as they're showing here, then this market probably has a leg up. I created another index of leaders in January, which gave me a heads up that the market was going to roll over, which it did, and this is doing nothing. So right now the strength are not necessarily the stocks that led us way up. Right now it's back to FANG. Know your news and earnings. I beat people up on this all the time, and I'll take credit for this because I made it up. That's not to say others haven't said it. It's a judgment call to not know. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. And if you come down my list, you can see Burlington Stores, Momo, we've got HP, Analog Devices, Michael Kors, Workaday, Dollar General, Dollar Tree, Ulta, Lululemon, VMware, Costco. There are a number of big, important earnings to come out this week. I will hold stocks that I've got a cushion over earnings, but I at least need to know when the earnings are coming. And then there's an economic calendar, and I haven't really looked at it too much yet. We've got some Fed heads always speaking. We got auction notes. It's not Unemployment Friday. There are jobless claims on Thursday. It looks like a medium week from news. Now, let me go into my Thinkorswim. Some of the other things that I do in Thinkorswim, which I just love this program, is we have a number of intermarket charts. So what about what's working? I must have did these. Sorry for those little squigglies. But by the time I figure out how to get rid of them, it'll take forever. So this is going to take forever to pull up, huh? All right. Well, here it's coming. So what I've built out here is a panel of charts looking at VIX, treasuries, preferreds, MLPs, junk, foreign bonds, U.S. bonds, muni bonds, U.S. dollar, gold, commodities, and crude oil. If it's green, the momentum's to the upside. If it's red, it's to the downside. This gives me a sense of other things in the market, of how they're doing. And it's important, do I want to be in stocks? Do I want to be in bonds? Now, another chart that I like to follow is, this is cool. These are called ratio charts. Oh my God, every time I draw on it, I get lines. And what I'm doing here is looking, and I got this from Market Scholars, is I could look at commodities versus bonds. Well, it's been good to be long commodities. That looks like it's changed. You can't see this real well. I don't want to go in there. Let's see if I can change. It doesn't like it for me to change the stuff here. Okay, you can see that oil has been outperforming gold. This is oil versus gold, but big sell-off on Friday. So I'm looking at the staples, discretionary versus staples. I'm looking at growth versus value. Growth is leading right now. Stocks actually doing worse than commodities over the last period of time. So I look at a number of ratio charts to tell me what's working, and then I have U.S. sectors to see. This is year. It's not the one I wanted. Sorry about that. Now I'm stuck. All right, there's got to be an easy way. Let me see. Go to my annotate and clear all drawings. Hey! So I can do the same thing looking at the various sectors. But what I really like to do is, how do I turn that off? Annotate. All right, good. Still sharing, is I can look at, I like to see how they compare on a graph. This is what I want. So I could see that even though, all right, so technology's been leading, or this is a year to date, technology's up 24%, finance is 18%, discretionary, so I can get a sense of what's working over the last year. Obviously, real estate, which I believe is telecom has been the worst. Staples, utilities, and research have all been the losers. This is year to date. And I might also want to look at different asset classes. And the same type of thing, seeing that oil has been by far the biggest outperformer, up 33% in the last year, followed by the Russell, the S&P, and emerging markets, just to get a sense of what's working in the market and what's not. Now here's my secret chart. I debated whether or not I'd even show you this. I hold this for my live meetings. Here's Jeffrey's simple market timing. And actually, I don't want to pull up on an HGSI chart. Here are Hindenburg's in the little red lines. Here is multiple moving averages. They're kind of secret, but not really. I gave them out at my live meeting. Here is the S&P 500. Down here is the MACD with standard settings. And then we can forget about the Eurekas and the Kahunas and the Phoenixes because I'm not talking about them today. It turns out when I play around that as long as my S&P is above its moving averages, and as long as the MACD is above its zero line, it's a market that I want to be very long. I could go back much further to the left. I couldn't get it on one slide. I have 1104 to 108 plus 233%. That's this box right here, the green box of bull. We broke above the lines here. We broke above the a little bit later here on the MACD. I take this line 58% between September 11th and August 15th. I am in the school that we have a new bull market that started here in 16, and that this isn't a single bull market since 2009 or 2011. And this current bull market, you can't read here, it's up 34% in 115 or so trading days. That's the red. So when I look at the market, we're still in the green box. So, market thoughts. The Russell leads the major indices, but most of them are stuck in a narrow 2 to 3 week range since breaking above recent resistance. Oil sold off sharply on Friday as world production is likely to increase. However, much of this off may be related to the COT that showed extreme bullishness among both professionals and non-pros. I'll show you that. Dollar's high, highest since November, which won't help oil and gold either, although commodities are up on the year, but they appear to be stalling. The indices may have churned, but this past week, utilities, real estate, information technology were leading, energy, materials, and financials lagging. And my guess is my best guess, and you know what a guess is, all right? A guess is a guess. It's an assumption. And in medicine, we used to take assumption and break it into three components. An assumption makes an ass of you and me. And that's assuming. So when I assume something, it's a guess. My guess is we break to the upside with the summer rally. I'm not sure when that break's going to occur. And then the low volume days take over and the market will churn. That said, I have to be nimble and prepare for what it does, not what I think it should do. But we have the green box, so I'm leading to the long side. So the presentation was hopefully useful, and you got some teaching out of that. And now I'm pretty much done with the PowerPoint. Now, in case you're asking or wondering, why didn't I do all those charts in HGSI? And there's probably 2 or 3 answers. One, I probably could do most of them. But I've spent so much money on other crap, and some of it good, some of it not so good. I like to use some of the other things that I've purchased. And then some of them, like the 13-week high-low, I want to do real time, and it's easier, and I do that in TC 2000. So I've now got my mindset. I'm thinking about the market, and I'm going to think that the market's going up. Now, I made a comment earlier, and I usually show my performance year to date for the simple reason is I really hate it when people don't, because you're supposed to go pay money for somebody who makes 3% a year or loses. I'm up. Last year I made a lot of money. I was obnoxious with some of my invites to my live meeting. I'm probably making more money. This is in the first 6 months or 5 months of the year. I'm up $1.3 million. My account starts with 2.5. What I do is I've got other money. I trade $2.5 million, and every time it runs too high up, I buy boats, buy presents for my wife, or move it to somewhere else. So I'm about to do a pull money out. But that's my return in 5 months. I started with 2.5, so that tells you that, and that's the last I have to talk about it, that's a 50% return on the year. And we are finishing May. So I can't make that. I don't know how to game you on how I do by playing with that number, because that number is auto-calculated by Thinkorswim. But that's the number on my Thinkorswim account. And so that doesn't mean I know anything, and it doesn't mean I don't lose everything tomorrow. It just means that some of this stuff has worked in the past. So now I've got that sense of the market. I feel I want to be looking potentially at some long things. The next step that I typically do, and actually I'm going to take a break here. Let me take a sip of some lemonade for my dry mouth. let me take a short detour. I love this site. This is called Discord, Discord. And I like the whaler too, Jim. And Discord is free. It's free for me and it's free for you. And it is I've created it to be the HGSI and with the asterisk users real-time chat board. I have invited folks who I think have good programs that I like them to interact. And so on there, you'll find TG Watkins, who's Moxie Trader, has a site. I'm hoping that these guys will keep their stuff within their rooms. So we as contributors or questions should ask within the room. I've got Moxie Trader. I've got Chris has been on a little bit from Edge Raider. I got to push him to keep him on more. I introduced you to Sager earlier. SN on the board, Superior Profit. He goes into some of the tools that I use, and new tools that I use, and I think he's got a nice product. And he does a free webinar every Saturday morning, which that's how I found him. And then, of course, those who know me, if there's any indicator out there, I have to own it, or any trading tool. Most of them I never use. This one is now a regular part of my trading. I have a section here for introductory lessons to HGSI. Hopefully, even oldies downloaded my trading philosophy, the A to Z of HGSI. This gives you a taste of what my live meetings are about. And that was one that I hope will help you get to where I am with the vocabulary, because so many people get lost on the vocabulary, and you can download this within the Discord site. It's a great site. I mean, some people are being very active and appreciate it. And, you ask a question and you get answers from multiple people. So I welcome you to participate. Obviously, I have a day job still, which you don't necessarily know. I got bored being retired, so I started another company, and I'm regretting every day of it, although the company's doing well. But I wish I was retired again, so I'm not sure how much longer before that happens. But there are people in the board constantly. I come in and out of the board. And then every week, although I didn't do it this week yet, I put up my stock picks of the week. And then Sayer comes in and tells me why they won't work. But that's okay. I think, it's a good way of getting a dialogue. So enough on the Discord site. So as a top-down guy, it's simple. I open up my designer and I go into user groups. And let's just start from let's look at the markets in HGSI very quickly. So I'm no longer using Woodward and Brown user groups because nobody else has it, because they aren't being made anymore, but you all have market analyst user groups, which are the same. Major Markets Plus, I hit my warehouse, and I should open up eventually all the indexes. Come on. There we go. I've got a lot of things open, so it's slowing things down. And then I'm going to go with, I like to rank these with my top-down view, and it just gives me a sense. I know there's 23, so let me make this a little bit bigger. And it just shows me, using a top-down view, of what's working. We'll come to the top. You see the raw combo. And this is the power of HGSI. And, I am first to admit that I can do some of this in VectorVest. I can do much of this in TC2000. I can do much of this using Sager's Vital and Edge products, Q Vital and Q Edge. But none of them do it as quickly and as easily with the data on my computer as I can do with HGSI. So the power of HGSI is this thing here called the view. And that view is a combination of a filter and a ranking module. A filter is how I take the 8,000 stocks and what characteristics that I limit those 8,000 stocks down to. The combo is how I rank the best to the worst. Within the combo, there are a few that I want to call out. The top-down analysis force and bongo scorecard is what I use on indexes. I can use it on stocks. I can also use it on industry groups. It basically tells me what's working price and volume-wise, 1 day, most important, some impact by 5 days, and a teeny bit of impact from 3 weeks. So it's really what's moving right now. Other ones that I use a lot, I use scorecard view. And actually, let me make this smaller so you can actually read the bottom. The scorecard locates top stocks to trade on technical and fundamental factors. Remember I said I like to buy strong fundamental stocks when they're breaking out from support. Stocks have strong earnings and revenue growth over the past year, strong relative strength, group rank accumulation, etc. So first thing I use on indexes is top down. I use my scorecard view pretty much all the time. And then when I'm ranking industry groups, I use a 2-day or 13-day force, which is Alexander Elder. There's a lot of other ones here, and yeah, I use them sometimes, but I pretty much 90% of the time just use the ones I just told you. So let's close that out. So filter limits what I see in the window. The combo ranker ranks them. So bonds, I said, turned up this week, and you could see based upon, especially on Friday's performance, they were the leaders. So I always come in, I say, where's the S&P 500? It's right in the middle. Where is the dollar? It's going to be above it. And usually it's hard. Where is the VIX? So the dollar and the VIX are above the S&P. That's never a good feeling for me. Then I look at where I live, which is small stocks. Where's the NASDAQ, small stocks, the Russell 2000, and I see they're all performing better than the S&P. So I feared I had a pretty decent week, and I did. Now within HGSI, it's not a hidden tool, but I bet most people don't use it. There's a thing called the group performance analysis. I like to think of it as my personal report card, because I could come in here, GPA, and I could say, how did I do last week? So I'm going to hit choose groups, and I'm going to keep those groups in, but I want to go to, I already took it out. Never mind. I already took out 521. But I ran a group performance analysis looking at the last week to see how I did compared to the indexes. And it's not really accurate because it assumes that everything was the same as it was on Friday a week ago, which isn't the case, and it doesn't assign different values to anything, just as far as numbers of shares. But it gives you a sense of whether it's working or not. So somewhere in here, it should be, this is what you get out of the GPA. You could put anything in it. So I ran it, and what does it show me? It shows me, first let's just be coloring. Black versus red, about 50-50. Let's get rid of that thing. So black and red are the same. So it's a neutral week, and I think the market was very neutral. The S&P 500 was here, was up 0.3%. I think it may have been one of the leaders. All right. Where's the HGS and the IBD lists? See, IBD 50 was up 1.21%. That's good. That tells me growth stocks were in. I'm a growth stock guy. Like to see that. And then I'm going to look for some of my things. My filtered buys, which is when I marry some of my different things, were up 1.63, so I outperformed the S&P. And my holdings were up 1.55. And my big buy list, which I go over every weekend, doesn't always behave as well as the filtered ones. And my big buy watch was actually kind of mediocre at 0.37. But it's the filtered buys that I like to trade, and I'll talk about those later on. So the GPA is a tool that I do usually on the weekends. Why? Because if I go 2 or 3 weeks and I'm underperforming the S&P 500, I need to get out of the market, or I need to lighten up a lot because what I'm doing isn't working. So I think it's important to have a real sense of reality. Now, every night I'm looking at what you can't see anymore because I've now made it dots. I'm looking at my performance. How did I do that day? All right, I go into Gainskeeper and I look at my realized and unrealized gains because I got a lot of taxes I'm going to be paying this year. I'm already taking out 7 figures considering how much I made last year as well. But you know what? Paying taxes is an honor because people who are bankrupt and lose all their money don't pay taxes. So I look at that. But I also go and do this. So I'm going to look at some of the major indexes just to get a sense of what the markets are doing. Now, we've already done it, so I'm going to go quickly. But I just want to show you how I use HGSI to do it. Oh, it opened up the right size. So it's going to open me up in the S&P 500. And just to teach you my charts, simple chart here. I have on the top my weekly bongo and the daily bongo. So I've been in a weekly bongo sales signal on the S&P for some time. That is a bothersome, but I've learned that it's late on these indexes to change, so I'm okay with it. The next 2 bars are 2 different ways of doing the Hindenburg, and you can see we haven't had a Hindenburg in quite some time. This is the high jump bar. Here's how it got up to the top, like I showed you in TradeStation before the market rolled over. Down here are my kahunas. A blue kahuna, that's a 0.24 or 0.4 on the darker version movement in percent B in a given day. And then a minus 0.24 or minus 0.4 in the darker version, kahuna to the downside, just looking at momentum up or down. And then this here is called a Eureka, which is the HGSI user follow-through day, analogous to what O'Neill does. There's a red one called the Phoenix, which is not a good thing to see. So here's the S&P 500. As we know, it's going sideways. Ignore these lines. They meant something to me back here. I should probably kill them. So I feel bullish overall, but we're certainly stalling here. So that has me a little bit, some indecision, not knowing when to pull the plug, or to go all in or go out. The Dow Jones Industrials looks the same. The NASDAQ looks a little bit better, still heading up. And as I said, the leader had been the Russell, which I put back in here, which also is flagging here. So the indexes look good. I feel good about them, just not necessarily see them being, I got to buy everything in the world tomorrow. I look at the dollar. We talked about it being up, and I also mentioned on the weekly that it's running into resistance. We looked at the VIX earlier, and I said it had come back down to a happy spot if you're long. It's living down here on the 200. All right. And then I also mentioned since the dollar's been strong, that might impact on gold and silver. You see gold has dropped down below its 200-day moving average, and silver as well. Now, gold has a little bit more upward momentum right now than silver, and I'm going to be watching it and see. But I've not been a gold bug for a long time, and you get little spits and spurts of when it looks like it's going to take off, but then you look at the monthly and go, "Oy, you really want to be long gold for?" It's really come down a lot. Someday it'll go up. I just don't know when. So that's basically what I do in this view. And now the second part of top down, so I've got my medium strong market in my mind, is go in and look at the industry groups, hit 07, hit warehouse view, and you can see I've got 174 index groups. And I want to look at 2-day force to show me how many of them have upward momentum. And I could see it is 40. And how many have downward momentum? Whoops, wrong one. I have 10. So I've got a lot more movement to the upside. What was weak on Fridays? Refiners, which has had a great run. Just look at something like, well, look at any of them. Valero, they've just had a huge run. Restaurants, internet, beverages, life science equipment, metals and mining, casinos, agriculture, so on and so forth. When I look over here on the 5-day, refiners took the biggest hit and you could see the majority of that hit came on Friday. Casinos, I think, had some losers, especially the ones that have a heavy Vegas contingent because of a Supreme Court ruling that you can have betting in other states as well. Let's look at the winners. Since I'm bullish, I want to look at winners. And then what I do as part of my top-down review, and I'm going to spend no more than 5 or 6 minutes on that, and then I want to show you some other things that I like to do. Right-click on semiconductors, change to index group, and these are the ones that come to the top. I don't want to be looking at 50. I'm only interested in the top. Sometimes I'll go down as far as the index, but I'm interested in the top. I happen to have a position in Micron. I actually held through some of this, bought more of it, and it's back up to near all-time highs. I love good earnings, and these are earnings per share growth compared to the prior year's quarter, slowing down but still huge compared to the multiple. Let me make this harder for you to read and put the rest of my D's on it. So I'm not going to spend a whole lot of time. It's in the video you downloaded, but I have my bongos. Notice the weekly bongos now gone green. Then I have accumulation distribution, strong accumulation. My two forces are green. This is the high jump. I'm nowhere near the high jump, but I was here when it pulled back. Imagine that. And then I look for Bible gap ups, evidence of a squeeze, mobile breakouts. I have this dark gray is one of the best things that you've got in HGSI, which is plotting the industry group strength on the same chart as the stock. I have an 8-day exponential, which is new, at least new on the presentation, but then a 17, a 50, and 200-day simple. Down here are my pocket pivots, Ala Morales and Catcher, unbalanced volume with phoenixes and eurekas when they have them, and then my kahunas in regular volume. And I just care about the right edge, and this right edge says, is this a cup handle breakout? Everything is green, looks strong, love the fundamentals. I already own it, but I like Micron a lot. NXP Semiconductors, I'm not playing with this guy because it's stuck in arbitrage hell, waiting to see if the Chinese allow its acquisition. Cavium is also being acquired by Marvell, and that caused a big pop here off of support with the Bible gap up. Again, another arbitrage play. I'd have to know more about the price that's being paid before I would touch it. The arbitrage is simple. No one knows if it's going to get bought, so there's a discount to what it's supposed to be bought at, and then sometimes there'll be a premium because somebody else might come in and bid. This one's way down the line. I'd have to look. I don't usually play arbitrage plays. Broadcom has been one of my favorites. It looks kind of sideways here, but if I drop back to a weekly, you can see it had been a huge run up. Is Broadcom getting ready to run? I think maybe. It's had some big upgrades. It's sitting right at the 200-day. Here's group strength. Here's a pocket pivot. This is what I'm looking for. I'd like to see it get above the 200 before I get interested and start looking at it. NVIDIA, this has been the big leader of the market. Still sideways move. And it probably has more room to run, but it didn't come up as one to buy today. Here's one that I like today. And I'm going to show you how I go beyond HGSI. On semiconductor. I look at it. Am I in an uptrend? Absolutely. Then I went sideways. And then I broke out, touching the 50-day moving average. Two pocket pivots, volume coming into the stock. Everything is green up here. I love the earnings per share growth compared to the PE. I'm going to look into my trade station, go to my market screener window, and let's see if on semiconductor, I think I looked at it in here. Yep, this is my filtered buy list from this week. And why did I like this? These are some trend lines put on by Q. This is the weekly chart. This here is a bearish headwind from Q. When I see that big pink dot, I know that the instrument is going to run into resistance and come down. I have a PPS buy signal occurring right off of weekly trendline support. I'm in a PPS buy signal on the daily. My OBVs are going up on both, coming out of a weekly squeeze. I like on semiconductor, and it was one of my favorites of the week. Marvell, this is the one's acquiring Cavium. I might spend a little time looking at this one. I don't like its earnings per share growth nearly as much. Qualcomm kind of reminds me of Broadcom, where it's just getting back above the 200. It hit its highs when Broadcom offered to buy it, and that was sort of when semi started rolling over. Still like more. Intel, what a beautiful lower left, upper right leader. Maybe it's getting ready for another leg up. Don't like the earnings per share growth compared to some of the others. And then the other that people are saying good things about is AMD. It broke above the 200. Good earnings per share growth. I don't like the multiple. So in this group, I like on semiconductor, and I bet we'll see that on my buy list. Then I right-click back. Next group, specialty apparel stores. Remember, I'm on 2-day force, and I'm looking raw ranking. Second one, left click, change index group, and let's see if any of these look buyable. Foot Locker had a viable gap up on Friday, a la Morales and Catcher. After a sideways move, pocket pivots, a kahuna. Now the question is, has it moved too far? It has a multiple of 13. It's got a growing, all right, so I might go to MarketSmith or some other source. But there are rules about trading a viable gap up. You'd have to buy it up here. But you know what? This is only about 10% for your stop. Don't let it get much below the viable gap up day, and more important, read Morales and Catcher's book. It'll tell you how to trade it. So that's viable. I can't buy Shoe Carnival, but boy, what a beautiful chart. Something's going on here with earnings coming in. It too had a viable gap up on Friday. L Brands, big pullback sitting on the 50, a couple pocket pivots and a kahuna coming out of a squeeze. Makes money, but horrible earnings per share growth. Big dividend. Hard to believe it can be sustained. I might start looking at this, but I'm not sure I want to buy it until it breaks at least above the 50, and it is in a downtrend. Floor & Decor, this kind of reminds me of a young Home Depot, and that it's early on in its lifespan. We've got one not too far from here. It's got earnings, it's growing in revenue, opening up new stores, and it's sitting down here. I'd rather wait till it gets above the 50. But this might be one to look at. I've got some Urban Outfitters. Some of these have looked pretty good. American Eagle Outfitters, these have looked very good. So despite the death of retail by Amazon, retail looks pretty good. Application software is the third group down. And I don't know the first couple, but let's take a look at them and see if there's anything here that you might want to put on a buy watch list. Quality Systems, they make EMRs. I compete against them. Kahuna, breakout, Bible gap up. Stock's been in a downtrend. Obviously, there's a story. I right-click, more info from web, go down to FinViz. It'll open up with QSII, and it'll show me what happened. Earnings, surge. Earnings beat, bookings rise. All right. I might want to spend some time looking. SailPoint Technologies, it's an IPO. Obviously, there's nothing to the left. Pullback, back to the 50, breaks out with pocket pivots, kahuna and volume out of a squeeze. Quick add to group. I don't think I made it on my buy watch earlier because it didn't show up on my scans. What don't I like about this? PE, I don't care. It's a newbie. Plenty of volume. I like this one. I better add it to my buy watch. All right, next. Tableau, we use them. Great looking chart. The fundies are tough on this. Probably goes a lot higher. I don't like buying stock that at this price it don't make money. It's just a personal thing to you. NetEase looks horrible. Intuit. Hard to believe that they don't make money either. What a great move up. So a lot of beautiful charts, not a lot of positive earnings. So I'm going to look at this and I'm going to say, I like that sale point and maybe the QSII. The rest I'm going to pass. Containers and packaging. Only one is above the index. That's meaningful to me. It's probably a takeover or something happened. So this one had a big move on Friday. Maybe it was just earnings. Let's see. Quick add to group or more info from Web, Finvez. So cool that it opens right up at my stock. Revenue grows 48%. So that was 3 weeks ago. I wonder if there's something else going on. Maybe Bemis is a container. So I might have to do some research. But then I see the volume is so small, I can't buy something with 200,000 shares. Ghilardi could control the entire float and try and beat me up. And I don't like going below the index. Yep. We'll look at the next one, airlines, and then we're going to do some other things. So I went long Delta. Let's take a look at what the airlines have. Airlines should benefit from falling fuel prices. So here's Southwest falling pretty sharply ever since they had the person killed by the exploding engine. 2 kahunas in a row took out the PSAR dot, mobile breakout from a squeeze. Earnings coming back in. Might be time to nibble, but I like Delta here. Sideways move coming out of a squeeze. 3 kahunas. Earnings per share growing, much greater than the PE, pays a dividend. Americans further down the pattern, as is Alaska. And United's another one that looks pretty good to me here as well. But I like Delta the best. So normally I would go through the top 10. I might look at some of the losers. Let me just continue on and show you some of the things that I do and as part of my trading. My buy watch for this week, and actually I came up with 40 stocks that I liked. So I'm going to let you look at these. And I like some for different reasons. Before you go out and buy any of them, you should know why I like them. A couple of characteristics that I see about these stocks. The vast majority of them have a positive momentum to the upside, 2-day and 13-day force. You better believe that if you're red, there's another reason for it. If I go over here, many of them have high ERG, and then there's some things here where the ERG is messed up. And that's a problem for me, and this is probably will be in my bottom fishing group. And there it is, and I'll talk more about those groups in a second. And actually, I don't use force here. Never mind. We go score, co-combo filter, all stocks. And now let me look at, all right. So the ERG's the same thing, but now I'm ranking them a little bit differently. All right, so I take this watch list, and I have my Bible gap ups that I want to buy, and I think we're going to put one into that list because the one we just added was a Bible gap up that I hadn't seen before. I look for bottom fishing. This is what a bottom fish looks like to me. Why am I looking at Tesaro? Yes, HGSI has intraday live data as long as I'm in Thinkorswim. When I hit that little box that opened up is the live data being updated. So you have to hit F5, or if you might have to hit function F5, and that will give you a live update intraday. You can run, and I'm responding to a question, obviously. You can run an update intraday, include intraday, and you get all the calculations done as if the market was just closed. So Tesaro is a stock that I know the company well. They've had some really bad news, but they've got an interesting pipeline, and the stock has fallen from 180 to about 50. It's had a couple of kahunas that came in. It's sitting in a squeeze, and they're going to present data at ASCO. So when I see something like that, I know on the littlest amount of good data, Tesaro could bounce. It had a high close doji on Friday. It's about to trigger a PPS weekly buy signal. Now, the problem with this is here's my auto trend lines from Sager. It's got to get above resistance. But this is one of the potential lottery tickets I might play going into ASCO. And you could see it sort of has bottomed, and I wouldn't let it fall below that line. So I might give it a few dollars a rope, but that to me is what bottom fishing is. And breakout earnings all-stars, I don't think I had any of those. Broken out and running. Got several of these made the list, and a breaking out and running would be something like Netflix. Netflix is a leader of the market right now. It's certainly not a value play. I can't say it's pulled back to support and broke out, but here's a stock getting multiple pocket pivots, a kahuna, breaking out to all-time highs, and I bet this thing runs to 400. It's got great earnings per share growth, even with its ridiculous PE. I love the story. I'm long Netflix. Well, the one category it fits in is broken out and running. Here's another one that's broken, AMC Networks. They keep buying back stock. They have a small multiple. I bet they get bought in all this consolidation on the content providers. Broke above the 200, a number of pocket pivots. This is another broken out and running. And then Teva Pharmaceuticals, which has been a dog, all of a sudden is broken out of a squeeze with kahuna, and it's starting to run. So I will often look at those stocks to get into. We'll come back to my filters buys. Sometimes I have the I can't help myself category. What do you do if you don't own El Dorado Resorts? You just love the story. This stock has already run. It's broken out. It's had a big run. It's clearly a lower left to upper right leader. Well, I may still buy something like this, but when I buy it, when it's sitting in this leaders extended or gone, I know I'm late. I know it's got more risk. And I know that my stop's probably not going to be within 6% because typically after they've run like this, I might have to put my stop closer to support. Maybe my support's here. But these are I can't help myself, so the big leaders, I want to be in them. I look at pullbacks ready to run. These are my favorites. So let's look at another one there. This is where I make all my money. And so let's play Etsy now, because we haven't looked at it, and I think that Etsy is a candidate. So let's look at Etsy. So Etsy is clearly an uptrend. It broke out in December. It's pulled back several times, ran up to 30, it went sideways, and it's sitting on the 50. It's in a squeeze. The weekly bongo is green. The high jump is fine. And I got a mobile breakout, a pocket pivot, and a kahuna. So I probably would look at this as one of my buys of the week. If this is my buy of the week, and I like it, I have to go look at TradeStation to make sure, I would say, all right, the high was 30.58. The PSAR dot is at 31.08. So I would put a buy. Let me get something to write this down because I always forget what I say and then I feel stupid. And I'm going late. I apologize. I will post this on the board. All right. Of course, now I can't find a pen. 1 second. All right. So the way I would play Etsy is I'd buy it only if it took out the PSAR dot. So I'd buy it at 31.10. I put the stop at the lowest of far bars, probably underneath this guy. And the low here was 28.60, so I put my stop at 28.55, which means I'm risking 215, 225. So I've got about an 8% risk. But to me, it's a high. I'm unlikely. To me, it's a high profile setup. It's a good setup because it's been pausing to refresh. I've got my momentum coming in. I've got a clear defined buy. I've got a stop that's defined by the chart pattern. If it drops much below the 50, I don't want to be in this stock. It's a failed breakout. So that would impact. And since I'm going to be risking about 2.25, if I'm willing to risk $5,000, I could buy about 2,400 shares. Now I want to validate it by going to TradeStation, and I know it's validated because it's on my good list here. And let's take a look at it. And it had a high close doji and a person buy signal on automated trendline support. OBV is taking off, coming out of a squeeze, and it's been basing on the weekly, but it's in a weekly buy as well. So I love it. Now, the other thing about this trade and why I like it is, good question, Jay, is I like it is because if the market falls on Monday, the stock's going to drop. And I'm not going to buy it until, this is for you, Jay, it trades above the red PSAR dot, turning that PSAR dot into a green buy signal. That's a Wells Wilder trading system. I'm not following it, but I have the advantage. Yes, you can update HGSI intraday with no delay using Thinkorswim, Google, or AlphaVantage. Thank you, Marilyn. The only challenge to that is if you want to run all your scans with the new data, it takes a few minutes to run them, but it runs them on real-time data. So that's how I look at Etsy. So Etsy made, and then Super Value. It's ugly, but it just broke above the 200 with a kahuna out of a squeeze. It's got earnings coming in. It's got accumulation, and I like Super Value as well. Then I look at stocks that I call pullbacks waiting for a signal. So these would typically be take a look at Win. I don't see any reason to buy this here. It's got a mobile breakout from a squeeze that's going sideways. I want to see it get some lift. I want some pocket pivots. I want a kahuna. But I want to be watching it. Big Five Sporting. It's sitting right on the 50. It's been in an uptrend. But I don't know when it's going to move. It could go sideways for months. So I'm looking for that to come in. Which brings me to the next thing that I wanted to demonstrate for you. Why you need to own TradeStation. In TradeStation, and I need a bigger monitor than I can show you tonight, I run all the stocks that I'm following, including the buys. And I apologize, I did a bad job. It won't affect much of setting the left-hand side there. Oh, well. Let me see if I can move it a little bit. There you go. You can see what they are now. Okay, that's better. And so I list my stocks, and then I have a number of things in radar screens, including, for those that are HGSIers, squeezes, pocket pivots, Bible gap ups, mobile breakouts, so I could see real time if I get a signal. Now, turns out, as I mentioned to you, I'm sort of getting more and more used to Sager stuff from Q. Yeah, HB is hard to borrow. And he's got a number. So I remember I mentioned headwind. So a headwind, see if there's any green headwinds. Oh, I know I saw them on some of my stuff. Let's see. All right, let's look at Abbott. That's a red headwind. So here's, and forget everything else, but it's basically showing me if I wanted to short a stock, here's a stock that's run up to its trend line resistance, and it had one of these headwind signals, which is a very bearish signal occurring here. So there's just a number of different tools that I use looking for setups. Now McKesson, a box setup, means that stock is pulled down to support, and I might want to look at it. So if I look at McKesson and it's pulled down to support, and this is the support right here, and I don't want to go too far into this. Sager can talk to you in the room, but I use a number of different things. So when I say a stock waiting for a signal, I'm just waiting for the signal to occur. And then there's special situations, and I picked two here. So let me just show you. AT&T, lousy stock chart. I can't say to buy this stock because of the stock chart. Look at that chart. It's horrible. Here's why I put it here. I would argue that AT&T is much closer to support than maybe it is to resistance. That it's highly unlikely, in my mind, let me just go back a little bit and look at some more. Still, it's highly unlikely in my mind, it's going back to 2012, this support, that AT&T is going out of business. In fact, when you buy stocks at the bottom of their trading range, they typically go up to the top of their trading range. It makes money. It's got growth of earnings coming in. Why is it a special situation? Because it pays a 6.2% dividend. This is when I buy and stock I stock away Verizon's and AT&T. I buy them when they're trashed because that's when you get the big dividend. The other special situation is a news play. Cara Therapeutics. I can't remember what the story was. It's a drug data. So I go to my FinViz. Oh, I know why. So they make a drug for kidney patients, and their drug is experimental. And they just signed a deal with a company to market their experimental drug in Europe. That company is owned by the largest owner of dialysis clinics in the United States, who will, by the way, be Cara Therapeutics' customer. So what better than to have your customer be a part owner of your company if you want to sell your product? So what it tells me with no inside knowledge, A, they must think the product's a good product and get approved, and B, that they're going to buy tons of it. So I'm going to be looking at Cara Therapeutics because of the story. Hence, it's a special situation. Now, when I go back to that group performance analysis that I did a while ago, I don't know if I have it here anymore. Let me call it back up. I actually have a chance to not only look at how I did compared to other things, but which type of my trades are working. Squeezing, potential reversal to the upside. Pull back to 50 with a kahuna. And it turns out bottom fishing did not work last week. It doesn't work in bad markets. Big volume the week before didn't work. So I look at the various pullback ready to run, I look at these to get a sense of what's working. Leaders extended or gone. I didn't have any the prior week. It helps me to drive what I'm going to buy. On that note, I'm going to shut up. I'm going to answer any questions that I haven't hit. Now, I did promise somebody a couple of comments. Let me go find their stocks. Hold on a second. It would have been too easy for me to have written them down. While I'm looking at that, here is an advertisement. I don't do this for the money. I have not asked you to pay me anything unless you've come to a live meeting. But I don't do them to lose money or to be embarrassed by having 3 people show up. So I am considering doing a live meeting in December. I've done these meetings before. I always get very high reviews. You get slides, you get videos, you get free indicators, you get fed. You might get to go on my boat. Maybe this year we'll go play golf. You get to network. It's usually in the $1,000 to $1,200 if I do 3 days, $500 if I do 1. Plus, obviously, there's a cost to getting here. And so if you're interested, please email me. And if there's enough interest, if we can find a date that works, then I'll hold a live meeting. If nobody emails me, that's fine. Just means one less weekend of being away from the greatest wife anybody ever had, in case she's listening. No, she is a great woman. She puts up with things like this. She just doesn't know why I went back to work. I wanted to mention Roku here. I like Roku as well. Tons of volume, in a squeeze, breaking out here. Same pattern over and over and over again. Now, some of you may have been to Orange County. In Orange County, I threw out this stock. I said, I'm liking Tandem here. And this is a Jesse Stein example, that we were sitting at a meeting and I said, I like this stock. I should have liked it back here, but I like this stock. So this is one that I had presented, and I was right. But I didn't know that when I was there, obviously. Maybe it was here when I picked it. But I like to look for patterns, pattern recognition. And I liked it here with the kahuna coming out of the squeeze. It's the same patterns over and over again. So let's look at the 2 that somebody asked me to look at for them. How do you get an invite to the Orange County? Greg Mills is on here. Greg, is there going to be a meeting in October, November? If you're still with us, could you put something in the chat room? And then when we do get an invitation, I will put it in the Discord site. So CDR and SAB, somebody asked for me to look at 2 stocks today. Cedar Shopping Centers. My thoughts about Cedar Shopping Centers. It's a bottom fish. It's a bottom. It's way low in the pattern. It's a cheap stock, less than $5. That said, it's sort of a fly pan bottom, moving up out of a squeeze, pays a 4.6% dividend. I probably would not buy this. This is a laggard, not a leader. But I will. I don't have a problem with it. To me, it's a cheap stock that's oversold. The other question was Sabra, another REIT, and this one I like a lot. Pullback is now broke above all its moving averages. Blue sky above it, and broke out above the PSAR dot. I like this one a lot. Pays an 8.9% dividend. Now, of course, it won't work because I'm trying to do it live, but let me show you, see if QEdge will work today. I've got so many things going on in the computer. I take nothing for granted, and then we're going to say goodnight. I like the REITs here. I showed you the interest rates back down. That should be good for REITs. And then when I was looking at industry group rotation, and they just use a different algorithm than, let me make sure I'm signed in. Connecting, okay. And I think it's updated, but let's get signed in. I'm online. Let me update. Retrieving sector. Now let me go to industry groups. And let's see what's been moving the most in 5 days. And real estate management and development is real estate services are 2 of the top 6 groups. So I like real estate here. I think this will be interesting to see. Does this mean rates are going down? Mr. Jaguar, I don't got anything back from Greg, but I will put something about the meeting in the Discord site. It was a great meeting. It's a small meeting. Greg, I guess he holds the group. It's last time was at a guy named David Larson's house, who was a great host, and George Lee and I, we shared the podium. George is a great trader. There's probably one in October, November. Based upon interest in a South Florida meeting, Myrna, and it's so nice to see your name on the list for reasons which I won't share. It's nice to see you. It'll be 1 or 3 days based upon interest. I prefer 3 days because we can have more fun. So on that note, I think I've covered most of the questions. Yeah, that means the Jaguar's never going to come to my meeting because he goes too close to Orange County. On that note, any other questions? Most of you have stuck around the whole time. Thank you. And I hope you got something out of this. And yeah, we'll look forward to doing this again sometime. Hey, Wojciech was there as well. He spoke about some stuff too. Thanks, everybody. Have a great night.